How's it go, guys? I'm Christopher McGee. I'm the owner of Halcyon Real Estate. We are affiliated with the Keller Williams Market Center in Salt Lake City, Utah. Today is the 27th of October, 2025, and this is the Numbers, the Nuance. This is where you come weekly in order to know exactly what's going on in Utah's housing market. We're going to jump right into it. I'll tell you the story of what I think the numbers show us, and then I'm just going to show you the numbers, as always, on charts and graphs so that you can see how the variables I'm telling you about the market trend over time. You can make the best decisions with the best data. Let's jump right in. So last week I repeated the story I've been saying for the last several weeks, and that is that the equilibrium of Utah's housing market, supply versus demand, is leaning still on building our supply, and our demand is remaining relatively subdued. Our housing prices are still higher than most people would like. Our interest rates are still, they're trending down. They've been trending down for 2.5 quarters now, but they're still higher than a lot of people would want them, particularly when you pair that higher interest rate with the higher price point. And so, like I said, and I keep saying, our housing market is functioning like we would want it to right now. It's just the way we would want it. It's moving the way we would expect for where we are seasonally this time of year. It all just is up like a bracket or a half bracket above where most people would want it to be. So we are expecting, frankly, that the increased inventory that we see, our increasing supply, gets to a point where when the demand comes back higher, we're not taking big bites out of our supply so that we put ourselves back in the scenario where we were in 2020, 2021, and a little, the few years before that, where the demand was so high and it was so easy to buy a home that everybody and their dog was doing it. Everybody was moving here, and it went as insane as we know it went, right? Now, this week I wanted to tell the story of one of the variables that often gets overlooked, and that is the price reductions per week. You see the price reduction per week listed in the charts, okay? And there's a number next to it, and the number may seem big, it may seem small. I don't know what it seems like to you, but there's nothing to compare it to, right? So you'll see that this week we had 1,321 price reductions that happened on the market last week. That might seem like a big number, I don't know, but standing alone, it's hard to know. Which is this favoring buyers? Is this favoring sellers? How much, right? So just for some perspective, I actually don't have the data because I started recording all this data in late 2022. It was October of 2022. 3 years now. And 2022 was the year, you may recall, that interest rates started to hike. It was February, March, April of 2022. Interest rates started coming up, and people were like, what? 4% interest rates? That's insane. And now we look back in that and say, if only I had been able to buy a home, right? If you were looking to buy a home at that point. 2021, the worst part of our market, when it was a super strong seller's market, there were 50 offers on a given home. It sold for 50 to 150K over asking price, and it sold over a weekend, right? At that point, I would bet there were 200 or fewer price reductions on any given week. I don't have the data to look at, but that's what I would think. Looking back at the last 3 years of data I do have, that is what I would think. And also importantly, I don't have a market to look at the data in that kind of granular detail where it was a really strong buyer's market here in Utah. But I do know that in late 2022, we had as high as 1,700 price reductions in a given week. That was like the peak that I see in October. And October is around where we would expect it to peak and then start to taper off down, okay? So in 2022, as interest rates rose and there were fewer and fewer buyers that were willing to make offers, and sellers had to start thinking about dropping their prices, their asking prices, in late 2022, when we had as many as 1,700 price reductions in a given week, that did not turn our market around in terms of where prices were going. Okay, that's important to understand. Our home prices were doing this, and then at that point in the market, they started to do this. They didn't turn around, they just stopped accelerating up as quickly. And that's important to understand. So right now, When in our market this last week, we see 1,321 price reductions on the market out of 13,600 plus homes that are actively for sale. That 1,300 plus doesn't seem like such a big number anymore, does it? And there are other things happening in the market that make it so that this year has seen the first slide in average home prices that we've seen for well over a decade. But that slide happened only in the first quarter of this year. And we have more reductions of the homes on the market, price reductions of our homes on the market now than we had at the beginning of the year. Understand, I know that you're looking at Zillow and you're looking at Realtor.com, and you're looking at whatever you look at where you look at homes, and you see homes with $100,000, six-figure price reductions. You see it. You've got to keep in mind that is the exception, not the rule. And when we know that there were 1,321 price reductions last week, we also know that the overwhelming majority of those took homes from their original list price to about maybe 1% less, or not even that much. That's what most of those price reductions did. Now, there are the homes that are sitting on the market for super long and they are dropping their prices dramatically, but there are also the homes that price conservatively and go in a week or two. And so average days on market is about 65 days right now, but the number of homes dropping their prices, that's not dramatic at all. We are not walking into a waterfall dive on home prices, much to the chagrin of many a YouTube fear-born creator when they're talking about the housing market. Not here in Utah, and I can't speak for the rest of the nation, but we're a bit of a microcosm of how housing markets move. We're not really bad and we're not incredible. We're just right at a spot where our housing market, like I said, is functioning generally the way we would want it to, just at a bracket above where many of us would want it to be. All right, let's look at the numbers. Okay, here's where things are in the Utah housing market as of the 27th of October, 2025. Our current inventory stands at 13,642. That is up from last week, still trending very level. We expect it to start to taper off in the coming month. Last week's average days on market came to 65. That is up from the previous week, trending moderately up as we expect heading into the colder weather here. Last week's average list price came to $707,108. That's up from the previous week, trending very, very moderately up, as you can see. And last week's average sold price came to $696,336. And so there's a difference, importantly, between average lists and average sold, where it actually sells, not just where the seller puts it on the market, right? And that difference came again, as it has all year, in favor of the buyer to the tune of $10,772. And importantly, the median sold price this last week came to $545,000. Not quite the $200K under average sold price that we've seen the last little bit, but still about $150K under it, and that's good to know. Last week, the number of homes that sold in Utah came to 557. That's up from the previous week. We still see this trending moderately down as we expect heading into winter. Same story for the number of homes we currently have under contract. That number comes to 4,777. So that's down from the previous week, also trending down as we expect seasonally. The number of price reductions, as I said, that we saw last week came to 1,321. That's down from the previous week and trending down. Last week, the number of listings that were either canceled, expired, or withdrawn from the MLS came to 432. That's down from last week, trending near perfectly level, even accounting for the spikes we see at the first reporting of each month for this data variable. And lastly, interest rates for a 30-year fixed-rate conventional loan stand at a national average of about 6.19%. That is down from last week, continuing a trajectory down, and that is it. And that is all for this week, guys. Thanks for watching. If you have any questions about the data, why I present it the way I do, or anything, feel free to hit me in the comments. I'm going to be happy to respond as always. If you or anybody you know is looking to move here in Utah, anywhere in the Salt Lake, the Davis, or the Utah County, I hope you're comfortable reaching out to me, and know that on this channel on YouTube, you'll also find I have 12 right now, and I'm building the list. There's a playlist of welcome to City X, whatever the city is, where most people live here in Utah. If you're from out of state looking to move into Utah, I've got a whole playlist of here's what Holiday looks like, here's what Sandy looks like, here's what South Jordan looks like, whatever the city is. So you can check those out. If there's a city you're interested in that you don't see on the list, feel free to hit me up. Let me know. I can make that the next video I make. And if this data is the kind of thing that you want your head wrapped around, particularly if you're looking in the near future at buying or selling a home or both, you will do no better than to hit subscribe and stay up on this info with me from week to week. Thanks for watching this week, guys. We'll see you in the next one. Bye-bye, bye-bye.